Hi, everyone. This is Jackie Cooper with the Blockchain Legal Institute and also the Crypto Blockchain DeFi Conversations. And today, for those of you that have been following the conversations from the cruise, the think tank cruise, you'll know that we've had many conversations with Dr. Chris Smithmeyer and also with Jack as well. And so we are continuing our conversations, and today we are going to be talking about stablecoins as well as our growing community and how they're looking at cryptocurrency as a way to actually be used in the global economy. I'm going to have for those of you that might not have watched any of our previous conversations, I'm going to have each of my guests share more about their background, because they are experts in this area. They've been in the field for many years. And so, for those of you that are stepping into the blockchain field or even are looking at maybe participating in this ecosystem or creating your own stable coin, these are individuals who can share more about the pros, the cons, the lessons learned because of what they've experienced and the changing climate with regulations and what's going on both in Europe and the United States, as well as other parts of the world. So welcome today. How are both of you? I think you're muted.
Somebody had to do it.
I'm doing well.
So who would like to go first to kind of share some background information?
You can go ahead, Jax.
Thank you. Yeah, sure. I'll go ahead. I am, I guess, a crypto veteran. I've been in Web3 since 2013. Saw the light via Bitcoin. Of course, got interested in what that was, both as a concept, but also as a technology. And I fell in love with the idea of programmable money, that you can write some code and the flow of funds and the payments happens, as written. And very early on, I started working on building all kinds of payment solutions, mostly using Bitcoin, whether in remittances or IoT device payments, where you had smart contracts before smart contracts. And very early, I predicted that we would see something like stablecoins, and took that prediction a bit further and saw that anyone could have their own stablecoin if they so wanted. You could imagine a Netflix dollar, Ethereum euro, a Uniswap pound, in-game gold, loyalty points that are tokenized. Essentially, I've been spending the last 7 years building a company which can issue stablecoins as a service. We can deploy different types of stablecoins in just a few days. I like to say that we are more the magnet strip than we are the credit card. So we want to deliver technology in this sector, in this vertical, to companies that want to have their own stablecoin for different needs.
So what is the name of your company, though?
I just thought that everybody knew that already. I didn't even thought to mention it. Our company is called Arise, and we're a Danish company. And yes, I am Jack Nicogosian. I'm an Armenian in Denmark. Started the company. I'm the CEO, and yeah.
On the chance that, like I said, people are coming over and they wouldn't, even though in the blog below for everyone who is listening, there'll be the contact information for both of my guests for sure. Chris, why don't you share a little bit more about your background? I know that you and I are working on a variety of projects, and every time that you and I talk, I feel like it's an onion, the layer comes off, and I'm learning something new about what you're doing today.
My name is Dr. Chris Smithmeyer. I'm the co-founder of Black Wallet Limited. I've been in cryptocurrency since about 2017. I got involved with some of the projects back then. I really didn't get super interested until about 2021 when I was doing an interview with Mark Zelenka from Veteran Coin. And he was talking about how cryptocurrency could help people and how it could provide access and provide payment solutions, echoing a lot of what Jack was saying. And we started talking about what the best way to work with things were. And that, of course, led us to, I think Jack can agree with me, the best way to do payments is through stablecoin. I think that's something that we both agree on a lot. And whenever we started looking into that, we started looking at the different ways that it could be done, how it could be managed, and how little our Congress knew about it. And from there, I got involved with the Government Blockchain Association. I've been very active with them. Currently, I have 3 states that have me writing laws for them on cryptocurrency or DAOs. 1 Native American nation, and 2 countries have just reached out to me about writing laws for them. And I also was the lead author of the United Nations model law on digital assets and cryptocurrency, and of course exchanges as well. And I get a lot of hate mail for that. But we're trying to bring together some standardization, something to the field that can allow people to have the trust in crypto that we need. The days of the wild, wild west are going away. I mean, the meme coins are always going to be around. People are going to be able to gamble on them. I have nothing against meme coins. Shiba Inu fan here. Love it. Looking forward to Jackie's book that's coming out. And with that, we need to start separating the companies that actually have a business model versus the companies that don't have a business model. And we're seeing that play out right now in some SEC cases. And it's very important. And I think it's time that the adults in the room step up. And I'm glad that Jack's here because he is definitely one of the adults over in Europe.
So both of you have talked about stablecoins. For those that might be new to this conversation and really don't have an understanding as to what it means, why don't we do a quick definition, because I'm all about vocabulary development. And I think it's also important, not just for those that are investing in an exchange, but those that might be trying to look at how do they incorporate this into a business model. So who would like to kind of talk about the definition of stablecoin?
I can say a few words. Oh yeah, no, you do. You go ahead, Chris.
My definition might be a little bit different than Jack's because, I mean, the stablecoin field is rapidly developing. The definition we work off of is a coin that has a stability matrix that is based off of some type of physical world asset. And the reason it's termed that way is because there are several variants that you can start seeing, because stability means different things to different people. $1 is always going to be worth $1, but also 1 apple is always going to be worth 1 apple. So if you compare something to itself, you're always going to have stability in some way. It just depends on which way that actual item is moving. And we see some currencies go up, some currencies go down, and that is either a positive or a negative stability matrix. The second thing that you need to have is some physical world asset backing it. The most common, of course, is fiat currency. There are also some that are based off stocks, bonds, all different kinds of things. And the reason we use physical world asset as much as possible instead of real world asset is because real world asset was the term that was used whenever people were demonizing cryptocurrency. And we've kind of rolled it into what we do, but we've got to remind people that it is the physical world because cryptocurrency is here. It is real. It's not this pretend thing that nerds play with on their computers. This is something that people are using for payments, that are using to build companies, and that people's livelihoods depend on. So we want to keep it physical world asset, but we don't get mad when people use real world asset.
Jack, do you want to add to that?
Yeah, stable coins, I couldn't have said it better. It's essentially, it depends on who issues it, right? Because if central banks are issuing stable coins, they call it CBDC, central bank digital currency.
Exactly.
If banks are doing it, they're calling it tokenized deposits. If we're tokenizing treasury bills, we might call it a security. And it's essentially about creating a new asset, new meaning a tokenized form of an old asset. And that can be, you know, apples and pears, so it can be dollars and gold, and it can be real estate, and it can be trade finance contracts. And this is where the waters get a little bit muddy when we use words like real world. Because yes, crypto is real world. You can measure the electrons in the mining servers, and the electrons are real. So what is real? I just think that when we utilize these new expressions, that we must recognize that they're not 100% cemented. I started working with stablecoins before stablecoins were called stablecoins, and we called it e-money, right, or smart money. But it's all kind of happening, and it's not really crystallized into becoming one thing or this thing. It's a high level interpretation of stable cryptocurrencies. Stable meaning a dollar is a dollar is a dollar. So a digital dollar should be backed by or keep a price of a dollar. In our company, we have dollar, euro, pound, Singapore dollar, and gold. So our e-gold follows 1 gram of gold. Our e-dollar is backed by $1. And yeah, so these are essentially stable coins. You can think of it as dumb money made smart, you know, traditional stuff made smart, so you can use it in a smart way.
So you sort of answered one of the questions that was popping in my mind as both of you were talking, and that's about the liquidity. Because again, if I know if a company is going to start to think about creating a stable coin, I know both of you have very reputable companies, but how much liquidity should be backed by a stable coin? Is it one-to-one? Can it be fractionalized? And then how would someone know that there is that backing and that people are just not saying it's a stable coin? How, from that perspective, and then extending it, I'm thinking about the regulations. And if you're using all different assets, then that might fall into different areas of commodities, securities, or other. So it becomes kind of, in my mind, complicated when you're creating this. Who wants to kind of share their ideas about that?
Jackie, haven't you followed? You just send a bunch of money to a bunch of degens who do whatever they want, like FTX and the others. No, there's 100 ways of thousands of ways that one must ensure that processes are done properly. And it's not, there's not like this is how you do it. There's, down to the code level, there is the auditing of the backing, there is the separation of assets and permissions and rights and the whole governance of it. I think that what we have seen in the last 4 years maybe is a lot of companies in Web3 going away, like Celsius and FTX, a lot of banks involving in crypto, shutting down. And the thing is with crypto, every time something bad happens, the next iteration is better. We actually do learn from the mistakes of the past. So now one could ask, why did Celsius or FTX even get to the point where they were allowed to do what they did? And where are all the legal people who went to jail? Where are all the regulators who so sure, there's a bunch of questions to be asked, but what we're now seeing is the audit in Arise, for example. We do monthly audits by Grant Thornton. We keep it all segregated, and we have a 2.5% over collateral. We only hold short-term bonds, and there's no commingling of funds. And those things were pretty amazing 5 years ago because nobody did it, but now it's kind of becoming how it should be done. So I think that for Arise, it's about having foresight. Like now we are working on a daily solvency bot, the solvency by API, simply calling the backing, and then you can see exactly how much we're backed. So we're constantly thinking in Arise, what's the best way to move forward? How can we make it better? And we can learn from many players in this ecosystem of what they do well and what they do not so great. Yeah. So transparency and compliance and some of these things that are like, of course, it got to be like that. People in our sector can tend to forget. But no, the entire ecosystem is maturing, and we're seeing much more serious actors, serious players. So it's becoming much more bankish. It's becoming bottled up into proper processes and standards.
Chris?
I completely agree with him. Like the standardizations are so important. One of my favorite things is like going online and seeing people that say, "Oh, this coin's going to be the most stable coin in the world because it's ISO 20,022 certified. And it's like, wait a minute. That's not a stability matrix. That's an interbank trading protocol. That is what that means. And illuminating, and like you said, certifications are so important because people have to learn what the different certifications mean. Right now, we're going through our BMM process, and that's the blockchain maturity model. A lot of people, if you don't know what that is one of the maturity models that's being used by the US government and several governments around the world to say whether a project is actually following what it says it's doing in its white paper. And even for a company that's like mine that's been through several audits, going through the BMM is very interesting because they're finding things that it's like, okay, you need to do this. Okay, you are doing it, but you need to prove you're doing it so that people can see that you're doing that. And as Jack said, with the different kind of stability models, there are different ways that you need to prove that you have your assets. And one of the things is auditing is universal. If you talk to a stable company that says they're not going to be audited, there's a problem there. There's no reason not to be audited because auditing, like if you're a multi-million-dollar company, costs about $1,000 for each audit. For a code audit, for a more in-depth accounting audit, you're looking at like $5,000. So it's really a inconsequential amount. And I can see some auditors' heads probably exploding out there whenever I give those numbers because I know a lot of auditors want to try to charge an arm and a leg for it. Whenever you're looking at the different types of stables, the way that they're audited is a little bit different. For fiat currency audits, you do want to look at the over-collateralization. You want to make sure that they're built on a system that is functional and that can be proven and that can have a bank say, yes, there is this much money, or have a DeFi organization say there is this much money sitting in a pool somewhere waiting for it. Whenever you're looking at the algos, it's important to look at the code and make sure that the code is doing what it's supposed to be doing, managing the backing funds to keep the value where it's supposed to be. And if you're looking at a maturity model system like ours, you're going to be looking at massive amounts of independent indexed funds that are working within the system to ensure that the value stays within the proper channel. It's kind of like a combination between a fiat and an algo. So it's very interesting whenever we push forward with that, because regardless of what it is, you have to let somebody see your books. And that's one of the big things that we've got to push here in the United States. I'm loving that MiCA pushed it over in Europe with the new MiCA regulations. I do have some concerns about the price of implementation in Europe right now, but MiCA is like if you went out and you wanted to buy a Ferrari of regulations. Great regulation. They put every trick and whistle in it that they could. Now I'm talking to a lot of countries over there. They're like, well, we can't afford it. It's going to cost us $1.2 billion to put the bureaucracy in place. But that's a good expenditure because having the proper bureaucracy, having the proper regulations allows us to be confident in the money. And that's the big thing that crypto needs right now is confidence in money. It can't be all FOMO and FUD. It has to be, it's going to be worth something tomorrow. And that's where stables really bring everything to the table.
So how many stable coins are there in the world, and how many are being used by countries or communities? I don't know if, you know, off the top of your head, if you can talk about that, but we have a growing global community that is exploring Bitcoin, is exploring cryptocurrency. I'm curious as to how they're going to start to integrate the stablecoin to make their economy maybe a little bit more user-friendly across borders.
I don't have an exact number, but I know that before Tether, which is the biggest stablecoin out there by market cap and transaction volume, there weren't really any stablecoins, and so they started that concept, say about 2019. There was one euro stablecoin early on when Arise started, Stasis Euro, and now there's like 30, 35 euro coins, 100 stable coins in dollars. The market is still dominated by Tether as number one, and then Circle is number two. Interestingly, we've seen announcements from Ripple that they're going to do dollar stable coins. We saw Stripe acquire Bridge with I think the intention of starting doing stable coins themselves. I don't have an exact number. I just know that just this quarter, we've assigned 2 clients in Arise, and they all want 2 different coins each, gold and dollar. So we're adding 4 new stable coins just by the work that we did the past few months. And we anticipate having say between 50 to 100 stable coins issued over the next 12 months. And that's just our doing. I think that there will be, as many as, maybe not as many as you see random degen meme coins, but even I was discussing with a guy, why don't I have Jack Dollar? You have Jackie Dollar, Chris has Chris Dollar, and I hold mine, you hold yours, and then we earn on the backing of the short-term bonds that are underlying our own dollar. It's just a dollar called something else. So I imagine that we'll have as many as we probably have loyalty coins, a Amazon gift card coin. That could be a stable coin. So it's not really something we can put a number on it like that. It's like, how many coins will we have? How many wallets will we have? Well, as many as needed. We might have one wallet per use case. We might have one coin per use case. I think we're going to see thousands of stable coins, and then millions, and then, on demand. It can be something that just happens when you sign up with a new Facebook account. You have a wallet, you have a coin. It'll be the magnet strip, not the credit card. So we probably won't even know how many there are. Some of them are not even on chain. They're like permission chain and private chains. Some of them are like a Maersk trade finance, trade shift settlement coin, whatever. That doesn't have to be on chain and count as how many are there. It might be their own, private setup. So we won't know. Probably as many coins as you have WordPress blogs.
Chris?
I agree with him. While he was speaking, I did take the time to look up. CoinMarketCap has 3,852 listed currently.
Wow.
So, and he said how many of them were from his company. Our company has 13 that are already audited and ready to go, and then we have another 24 that are in development on some of the more unique code bases. Because rather than different assets, we go on different chains to make sure that we can have some back-end compatibility for the forthcoming DEX. I agree with him. The more companies that are using stablecoin internally, the better, because that allows for interior traceable transactions. And I don't know if anybody watched the Rand Paul Festivus report. I'm not a big Rand Paul fan, but I do look forward to it every year, where he exposes government corruption in the United States and how much money we wasted. The big winner this year was how much cocaine does it take to make a rat be attracted to a less healthy mate just so it can get more cocaine? And I'm sure that is a huge issue that every American and people even over in Europe are wondering about, how much crack we have to give to rats to make them attracted to unattractive rats. But if we had that type of traceability in government and had it on the blockchain, then it wouldn't be at the end of the year when Rand Paul finds these absolutely hilarious things like the border wall we're building in Paraguay while we're demonizing border walls in the United States. But it would have something where people could look at it all year and say, oh, wait a minute, why are we giving money to a hotel in Bermuda that does not exist anymore? We gave over $700,000 to fix their pool to a hotel in Bermuda this year that doesn't exist anymore. It was destroyed by the hurricane. The company's out of business. Nobody knows where the money went. Blockchain allows us to do that, and stablecoin allows us to say, hey, this is happening. Why is it happening? And it's so important. And the more we put out there, and I'm kind of against the central banks putting it out, because the central bank should be managing money. It should not be creating money. And that means that the private companies and the private sector should be the ones driving the economy. And whenever these stable coins come out, these private companies put them out there, we say, hold up, government, we can do it faster, we can do it better, and we can do it auditable, and make sure that people's money isn't being wasted. Because, hey, I'm always worried about the crack addicted rats as much as anybody else, but it's still taxpayer money, and there's a lot of starving people out there that it could really help.
So, in listening to both of you, one of the thoughts that popped into my mind, and I'm not quite sure when this was created. Both of you are very technical, so you might actually remember. But with websites, there's the HTTP, and now there's the HTTPS. And I keep thinking that in terms of as the cryptocurrency market develops, there might be a designation that will end up being tagged onto some of these coins to say that it is more of a secure coin. It's a stable coin as opposed to a non-backed coin. So I see that that might end up being a tag that, when people are looking at investing in certain things, that they're able to kind of look for as a marker. Where do you
Jackie, maybe, but honestly, man, I hope it doesn't get to that. Whenever you swipe your credit card, you don't know who delivers the technology to mint your plastic, or to mold it. You don't know who puts the button. You don't know who makes the magnet strip. You don't know who makes the chip. You don't know who makes the APIs for the POS terminal in the shop. You don't know nothing. And are we honestly going to expect that all of a sudden people need to understand the products they're using? Since when? Like, who the heck knows what's inside of an iPad when they use an iPad? Nobody knows. I think that these things must be known to the participants in the industry. We're signing a client who's a fintech, a PSP. They do business in 30 plus countries. They know what they want. They know what they look for. They know what to ask for. And they must do their due diligence, and Arise must be licensed and proper and do the things needed on a regulatory perspective in order for these guys to know what they're buying. The same way as if I go and buy a software product from Amazon, I must be technically sufficient in order to know what to ask and know what to buy, know which shop to go to. But do we expect some person to understand that if they want to build a WordPress blog or if they want to start something? No, I don't think so. So I hope that these standards will be, for the industry. 10 years later, I've been in Bitcoin for 10 years. There are fewer places you can spend your Bitcoin in Copenhagen today than in 2015 when I lived 1 month only on Bitcoin.
Wow.
And has people become more technical? Has my mom suddenly become a crypto wizard? No. Is she gonna? No. No. It's my job to hide away the complexities, make it proper so that she can tell Alexa, buy a Pepsi for my daughter, and then Alexa will do it, however way Alexa feels like it must do it. I'm not pro, let's make it technically advanced for retail to comprehend. I'm pro, let's put it on, let's bottle it up, make standards, and do it properly for the industry to understand.
So, Chris, I know that, and I appreciate what you're saying, Jack. Chris, I know that you had talked about the blockchain maturity model, and both of you are talking about standards. Do you think that there are certain minimum standards that should be put into place, and should it be put into regulations, or should it be industry driven?
Both. I do believe it should be industry driven. I believe it should be put into regulations. I am going to echo a lot of what Jack just said because he put it as perfectly as I think he could put it. That the regulations are for the industry to follow the rules. It's not out there so that everybody has to learn how to build their own blockchain and stuff like that. There are people like me and Jack here that'll put that together for you. The regulations need to be out there and hold people accountable for breaking the rules. And I think a lot of the regulations are going the wrong way right now, and they're trying to regulate the people that are following the rules and let the other people slide. And that's very dangerous because there are a lot of rules out there. As I noted in Dragons of the Digital Age, the rules for keeping cryptocurrency stable are already out there. We've got contract law. We've got cross-border payment laws with AML and everything like that. That's stuff that the industry is required to follow. If you don't follow those rules, you should be held accountable for that. We shouldn't go out and make a whole new rule like you're not allowed to do this. Well, no, just follow the contract rules. The contract law has been established for 2,000 years. I mean, it's not like we have to reinvent the wheel every time something new comes out. And as for indicator for what a stable coin is, I do think it would be nice if there was something on the end of it like like whenever you say about the credit cards and everything, it says brought to you by Visa, just to let people know it's a stable coin, but to explain to them how the stability matrix works and everything like that. That's something that people need to do in their own research. And I agree with Jack that if we go full on nanny state with this and try to make it where everybody understands everything, you're going to end up with a culture that nobody understands anything. And you're just going to sit there with people with their hands on
regulators, right? Regulators should understand.
Yeah.
To begin with, because I'm tired of seeing
Yes.
companies that break the law and then nothing happens. But they were licensed, whether it's the BID license or it's a VASP registration or it's a money transmitter license. If a license is given and then, you know, the company breaks the trust or does something illicit, it's not only then the company's fault, it is also the giver of the license. The regulator must know what they're doing. And Chris, you said MiCA had its issues. MiCA is like all-encompassing, overarching, covers everything at once, because it seems like the people drafting it have not taken into consideration that this is a moving ship that must change sails and steer as the wind changes. It's not, they're like, this is it. Like, not really though, right? I can't do a whole prospectus if I'm an artist issuing an NFT, right? Or like, so it's a, yeah, sorry for cutting your tongue, Chris.
No, you're right. You're right.
No worries. The reason I'm laughing, is because I know a professor that's going to be watching this that is sitting there going, yes, because she has to deal with MiCA, and that is one of her biggest complaints, is that they don't realize what the that it is a moving thing. And I'm just imagining her just saying yes as Jack says that, because it's so important that when we regulate and when we do things and hold people accountable, it's so important. Because one of the favorite groups that I like to make sure to stay active and keep people from trying to get in trouble with is, there is a chain out there that does cross-border payments, and they've lost 3,200 blocks from their blockchain, which means they're not a real blockchain because they don't have a Genesis block. And it's so scary that the regulators aren't taking care of that, because they're talking about other issues. And it's like, if you don't know where all your blocks are, you cannot pass AML. That is not an argument statement. That is a factual statement, because you don't know who made money during those blocks. And if we're not taking care of problems like this, we didn't learn a lesson from FTX, because we're letting people get away with sloppy bookkeeping. And like Jack said, it's all about the regulators knowing what to look for. And they're one of my favorite examples is, do you know who the first person that they called after the FTX scandal to speak in front of Congress about cryptocurrency to fix the problems with the FTX scandal was? It was Sam Bankman-Fried. It was the guy that did it. And they're like, hey, how can we stop you from doing this again? And it's like, put him in jail. I mean, that's the correct answer. But no, they let him talk in front of Congress. And it was like, why? Why not ask people like Jack, who have a good, clean record, and say, hey, have Jack talk and how to fix these problems? And that's really a big thing.
They should have asked Sam Bankman-Fried, what could we as regulators have done differently so that you did not maintain your license for 4 years while doing shenanigans? What could we have done differently? Please teach us. That they could have asked him, so he could say, well, this is how I cheated you. This is how I circumvented your audits. This is how I did it. Like, and let's start there, because sorry, Chris, I know we can go on a tangent on this, but the same thing with Celsius, the same thing with Luna, the same thing with Silvergate and Signature and Silicon Valley Bank, and we could keep going. I mean,
this is very important though, because my question that I'm thinking as you guys are talking is, you have the regulations passed, and then you have to do the monitoring. And like you said, if someone is violating it and no one is watching, it's not like you're driving. Well, it is. But again, if you're on a road and you're driving and you run a red light and there's maybe a camera, maybe not, but someone sees you, then you get stopped and you get a ticket. In this situation, with all these companies that are out there, we might not have, there might be agencies who are supposed to be watching, but maybe they don't have the staffing to be able to monitor everything. So how do we enforce And how do we then determine that, unless it's, again, self-reporting, saying I'm become a victim, look at this. How do we then bring the accountability that you're talking about?
I think they need to invest in people like
Competence.
me and
I mean,
pay. Oh, sorry, Chris. There was a lag.
yeah, I'm lagging for some reason. I apologize. I agree with what you just said, though. They need to pay people like him to do it, because that is what brings it to the table. If you look at like the SEC and the CFTC, they have a couple people that specialize in cryptocurrency. And by specialize, I mean they're pretty much up to date for 2015. We need people that are on the cutting edge of the field. We need the people that are actively working, not the famous names you see on TV coming in and talking. I mean, as much as I think Elon Musk is going to help lower government corruption, he's not really in the crypto space. He builds spaceships. He builds Twitter stuff. I don't know what he builds, Twitter. But we need people that are actively working, because we see the problems every day. My CTO comes to me every day and says, hey, this is what's going on. This is what we need to fix and we need to adjust for. That's what we need somebody telling the organizations that oversee it. And here in the United States, it's cryptocurrency, especially stable coins like mine and Jack's. The comptroller of currencies is the obvious office that should be controlling cryptocurrency. It's in the name. Get some Ben Shapiro action going here. And if we can get that where it's being treated as a currency, we can build a better system. So I'm going to stop talking now so the lag doesn't overcut.
It's okay. Jack, what are your thoughts on that?
I mean, we can't just keep agreeing, me and Chris, but yeah.
It's okay. We're educating those who are listening too, because of the fact that they might not understand the complexity of the industry that you guys are both in.
And the thing is, look, there's so many of these things that one must do, which is a no-brainer, like auditing, separation of assets. And there has been so many obvious shenanigans, also from the big ones like Circle. There was this whole audit thing where they wired like $1 billion to Binance for the BUSD audit, and then they got it sent back. I mean, I can't remember the exact details, but there have been so many obvious things where it's like, this seems weird. And with Tether, that's just even more apparent. They just don't want to do audits. And even the things with Tether that has been, they did get a massive fine. We've already proven that they did a bunch of wrongdoings. And this whole too big to fail concept is very dangerous in crypto, because that's not why we invented crypto and have been working in this sector. It was not to have the biggest coin after Bitcoin being a centralized, shady organization. And that's why I think that it's important that we decentralize the participants in Web3, right? So you don't just have one stablecoin issuer, one gold issuer, one real estate issuer, one commodities issuer. No, this is a technology that should be utilized by thousands and thousands of participants, like economics works today with regtechs and fintechs and banks and central banks and brokers and forex markets and liquidity providers. It's all an ecosystem with a lot of participants. I think that's way healthier than having $1 stablecoin being too big to fail. And everybody in crypto uses USDT, but none of us do it because we want to. It just works and it's there, and we're all anticipating the day it doesn't work anymore. Nobody's holding USDT, not if they can do without. It's a in and out, quick. Didn't do it, pretend I didn't touch it. But in reality, every time you touch Tether, it feels a bit scary.
Chris, what
Russian
are your thoughts?
roulette?
Yeah.
it's the third season of Squid Games. It's just doing swaps on Tether.
So you brought up, and I do both want both of you to kind of comment on this, because I was thinking this while you were talking. the decentralized nature of why we stepped into this space. And DeFi, if we're becoming more centralized with a stable coin, then how do we keep the philosophy of why we did this going? And the monitoring, again, when you're in the DeFi space, there might be not as much monitoring, even though there should be. So what are your thoughts about this? Because we're talking about the fact that stablecoin is definitely here. It's being adopted, and it's probably going to become a lot more frequent because businesses are going to be using this concept. But what about decentralization and DeFi? Where does all that fit in?
You can have a centralized product using a decentralized network. That's why banks are trying to make tokenized deposits, because even banks don't trust each other. So they're like, well, if Bank A and Bank B have a trustless way of settling with one another, they would use that contra, let me build my own and let you build your own, and then let's combine our two silos. So it is a technology like so many others, like encryption. It has just become so easy encrypting stuff that now it's already in WhatsApp. It's already in Telegram. You don't need to work hard to encrypt stuff anymore. And that's what blockchain does. It's a shelf product that offers a certain type of solutions. And now this shelf product has become so advanced that even banks and central banks and large corporations can start using this and get the advantages that this brings, whether it's savings or trust or mitigating risk. It is just a technology. And everybody will use tokenization and cryptocurrencies and blockchain in the same way as we use HTTPS and in the same way as we use other types of standards. It'll just be like a common thing in the massive tech stack which makes up a computer or any IT solution. We don't have to see it as two separate worlds, right? It's all going to be intertwined, and in 10 years, regular folks still don't get it. I don't think so. They're still not going to get it.
Yeah. Chris, I'm going to let you make a comment, and then I have one last question for both of you.
Okay. Like you said, we've been agreeing all day, and I'm not going to break the streak right now. I'm actually working with different companies on two separate projects. One is for interchain and communication protocols within block matrices, and one is for interlocutory liquidity pools using a standardized system for multi-chain, multi-currency liquidity pools, so that we're not having a one-for-one liquidity pool, but rather a large liquidity pool, kind of like the traditional Forex market. And both of these products are being developed as open source. They're being developed as, and it's going to be an open patent when they're patented. We want to make sure that everybody is able to use these. Everybody has access to them, kind of like HTTP and HTTP2 and 3 and S and all the new different HTTP protocols. Because, as he said, there are things that are built into a computer that make your life better. And if somebody sits there and says, hey, we're going to make it, what was it? What were those zip drives? Remember the zip drives? They're like, this is going to completely change the computer, but we're going to patent it and charge a license for everybody that uses the zip drive. And people are like, we're going to go back to the crappy floppy disks, even though they're not as efficient, because they're free. And they made the world better. And then CDs did the same thing. And digital data transfers. And BitTorrent was one of the most wonderful things in the world. And I know the government hates it, but it was wonderful because it gave people access to stuff they should have access to. And this really draws into question, do we need to change our patent and copyright laws to shorten the terms? Because people are making more money faster off of products. Once you've made your money off of it, shouldn't it be part of the public domain to help other people out? And that's how science moves forward. And that's why we have copyrights and patents. So it's really important. And as we move through and as we build these systems, let's integrate it into our lifestyle and integrate it into our cultural zeitgeist to make it a better world for everybody.
I always love talking with both of you because of both the tech side of our conversations as well as the the philosophy of where we're going. And so, as part of our wrap up for today's conversation, even though I know we're going to have more, what are some of the takeaways that you want individuals who are listening to this conversation to think about, whether it's the businesses that might want to apply what you're talking about, or the consumers who might be using the stable coins and enjoying the products that are applying? Anything that you want them to be thinking about as short takeaways?
I will not speak to retail because I think that they're not going to do anything differently. All of a sudden, their Venmo or PayPal is just going to offer them cool shit that it didn't used to do before. That can be different. It can be, loyalty coins. It can be gold. It can be investments. You don't even need to know. For industry participants in Web 2 and Web 3, both Web 2 and Web 3, I would say if you don't have a stablecoin narrative, if you don't have a stablecoin partner, you're already too late. You need to have a strategy for how you are going to use stablecoins, how you're going to make your own. And the best thing you can do is contact us at arise.io, and we will gladly take you through the entire experience and make sure that you level up, essentially, because you cannot afford to be left out. The winners of tomorrow are forged today. Don't miss out.
Chris?
I completely agree with him. The more stable coins we get out here, the better. And the more we stabilize the system, the better. And we're going to see a lot more pairings and liquidity pools to build out the stability we need and the access we need. And I know several companies that are putting out credit cards. I mean, a lot of us know Julius from MasterCard. He's absolutely amazing and trying to bring cryptocurrency more into MasterCard. And as it becomes normalized, it will become used more. And as it's used more, for the average 99% of the people in the world, it's not going to change their lives until it does. Because they're not going to realize what's changing, but it's going to help stop criminal activity. It's going to help ensure that sanctions are enforced whenever we actually hold companies accountable for AML and KYC. It's going to get the drugs off the street. It's going to help people get treatment. It's going to help domestic violence victims seek help. And it's all because the system can be automated and can function. The stuff that we don't have enough human beings on the planet to do, the system can do that. And as we work together, now ours is institutional, it goes company to company. That's what we build with Kiros on blackwalletgroup.com. If you want to check us out, it'll take you to kiroscoin.com. But as companies at the business level, at the retail level, start having this assimilated, the world is going to move forward. Whether it's going to move forward with or without us, but it can move towards a utopian future as opposed to a dystopian future. I think nobody wants Mad Max. Everybody wants it to be a nice world where everybody's taken care of, like in Star Trek or something like that. So I think that's the world we're trying to build, and we're actively working with the National Digi Foundation and talking to the Space Force about actually making that world a reality for everybody. And I hope everybody will reach out to us, reach out to Jack, and try to make the world a better place.
I appreciate both of you, and I know that we're going to have many more conversations. So for those of you that are listening, definitely hop on to our next conversation, and definitely like and follow, so that way you can see more about the communications that we're having with all these new these visionaries from around the world, like Chris and Jack. So everyone, thank you for hopping on and listening. And Jack and Chris, I will chat with you soon. Thank you.
Thank you.
Bye.